The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the October 22nd wonderful Wednesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Perseverance Rhodes. Hope everyone out there had a great evening. Let's make sure that you and I, that we do all that we can do to have a great day. Of course, the easiest way to do that is to always remember that we are not prisoners of our past, but instead we're pioneers of our future. And it's always easier to remember that. Always easy to remember that when we realize that it's all about thanks-living. You see, thanks-living centers around things like giving thanks for everything that we have in our life. You see, a grateful mind, that means we have to have gratitude. A grateful mind will attract great many things to each of us. In fact, it's our attitude of gratitude that opens the door to abundance in life. And thanks-living, it's got to be lived each and every day, regardless of circumstances. Look, each of us have circumstances in life out there. In fact, that's the real power. You see, the real power, and sometimes most difficult thing to grasp out there, is those of us that have the most difficult of problems, the most difficult challenges, the most difficult obstacles. Well, what we really find out is those are really gifts. Yes, those are gifts, because when you and I, when we overcome all of those obstacles, guess what? We become stronger. We become better. We become more compassionate out there. And I like to say, something to think about. Well, look, folks, I am grateful that you're with me here this morning. Thanks so much for doing that. I'd love to hear from you. Just pick up that phone. Give me a call at 877-927-6648. Internationally, you can call me at 727-445-1044. Together, you and I, we can go on a safari hunt. We can go looking for bulls and bears. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show right now. We got Dow futures. They're up 13 points, trading out at 16,560. S&P flat, trade at 1938. NASDAQ flat as well, trading at 39.71. King dollar not flat, up 436 ticks out here, trading out at 85.84. That's putting a little bit of pressure on Goldilocks, back $8. Silver down 30 pennies, trading at 17.24. Light sweet crude up 50 cents, trading out at 82.99. A quick peek across the globe. Let's see what we've got out here. We've got the DAX is up 35 points. Not the big celebration that, well, I guess the DAX was up pretty strong yesterday. Not as strong. I don't think it was as, not near as strong as our markets. Hey, the FTSE, that's up 11 points right now. She's trading out at 63.84. The Nikkei, boy, you talk about up and down. You talk about the roller coaster ride. Last night, up 391 points. It has 400-point, 500-point moves now the last 3 days in a row out there, finishing out at 15,195. Hang Seng up 315 points as well. That was up 1.3%. And, of course, the Shanghai, that was off 13 points, down about 0.5%. All right, so where do we begin? Where do we begin? Well, of course, you know that Stevie here has been calling for a significant market bottom. How we doing so far? I have to say, we're doing extremely well. What the market has formed is an extremely significant bottom. It is the bottom that's going to take us up into the Christmas time period, into January. So that's the bottom that's in. The real question now is how to deal with any kind of retracement, if the market is kind enough to go ahead and give us a retracement. But the significant bottom is in. No question about it. Oh, the only question about it would be if sellers come in and destroy that. So, but what we do know is that as the market was cascading down, I was able to say, look, folks, this is what we should expect, a really nice, significant bottom. And remember, we're just about to click over. I talked about it's all about Thanksgiving. I mean, we're not that far away from Thanksgiving. All right, what is today's October? What is today? October 21st. When is Thanksgiving? 30 days from now or so, something along those lines. So we're really not that far, and we are just about out of the unfavorable seasonal cycle out here. So in essence, we've seen that correction during that unfavorable time period, and really the damage not too bad out there. Now, does that mean that we won't see some corrections in the marketplace along the way? You know, as I mentioned yesterday, what I'd love to see, and I don't know that we'll get it, is one more little maybe scary move to the downside. I'm starting to, based on yesterday's move higher, It's not like that was a blow-off top or anything. And, hey, look, we're coming into a new moon tomorrow, a solar eclipse of the moon. Who sings that song? And, hey, a nice little pullback tomorrow, Friday. That would be your buying opportunity. Maybe all the way into Monday, but I don't know that we're going to get it. If we are going to get it, if we take a look at, we do something that I did for my subscribers this morning, only I didn't include the Dow chart. So it's just really a continuation, and you'll get a feel for some of the types of charts that I include here. We're going to take a look at the Dow futures. Now, in this case here, I just switched over to my Ninja Trader platform. So I've got eSignal that I use, has been my data provider forever, and those are mainly the charts that you see on my screen here each and every morning. In fact, I'm going to be doing a special workshop for eSignal subscribers a week from today at 4:30 in the afternoon. Now, if you're not an eSignal subscriber, we've made it so that you can attend that workshop as well. We put a link or put a little button under Breaking News, right under Breaking News on the homepage of TFNN.com. So click on that if you'd like to attend that free workshop, 1 hour workshop. It's about buying and selling the D point. It's about the A to B equals CD pattern, and it'll certainly be worthwhile for you to attend. If we take a look at the Dow futures, the daily, remember the Dow has really been kind of the one that's been struggling here. You had IBM that was off. Who was it yesterday? That was Coca-Cola, I believe. So the Dow, hasn't had all of its troops in order here. But if we take a look at this move here, real strong move, not anywhere near as strong as the S&P or the NASDAQ, but nonetheless, still you got this nice V-shaped bottom that has formed out here. If we take a look at where's resistance on a daily basis, well, you get your market profile high of about 16,713. So that's a little hurdle that it needs to overcome. I believe it will overcome that level. And only if we get only if the bottoms are taken out from October 15th does that Santa Claus rally opinion maybe begin to wane out there. But I really don't think that's what we're going to see inside of the marketplace. Retracement, yes. And then I think it becomes the final retracement that we see before we are totally off to the races out there. So which did the Dow do? This Dow is going to get all the way back up to its highs. It's going to make 100% move. It's going to get back up to that September 19th high at a minimum. It's probably going to go ahead and take that out, and it's going to set up the fifth and final outcome of every Gartley buy pattern. That's what we have in the marketplace, and it's going to set up an A to B equals CD to the upside out there. But if we take a look at the daily chart, no signs of reversal yet. We know where there's some resistance, and that's at the 16,713 level. That's on a daily chart. Let's go take a look at our 5-hour energy chart out here, sponsored by Saratoga Bob in the Tiger's Den out here. If we take a look at that 5-hour energy chart, it's in bullish formation. It's above its market profile high. That becomes resistance. Any pullback, it's the 16,379 level. And if that were to occur, and I'd love for that to occur, I suppose I'd love for that to occur, everybody would be saying, Steve Rhodes, you don't know what in the heck you're talking about, because you're talking a couple 100-point move. 16,379, you're at 16,578. All of a sudden the reports are going to be out, the sky is falling. No, the sky would be that'd be Santa giving you an opportunity to buy into his rally that's going to be unfolding here. Now, we are in the, there's no reversal signals. There's no Rhodes momentum indicator signal at this stage here. There's no bearish candlestick. If we take a look at wave counts, you are, you've made the fifth of maybe 7 waves out there. You may have even recycled out here. That's why it's hard to say whether or not we're really going to get any kind of retracement. But I can tell you on the 5-hour energy chart for the weak link out here, which is the Dow, it's not showing any kind of signs of weakness out there. If we take a look and we step down to the 2-hour chart, we've got to find a sponsor for the 2-hour chart out here. Now, the 2-hour chart, I've got, it's above its market profile high. So it's above 16,432. There's no Rhodes momentum indicator signal here that suggests that price has gotten too stretched even on this move. And it's been one heck of a move out here. Yeah, it hasn't been as a big move here in the Dow as it has been in the NASDAQ. So we can take a look at the NASDAQ or the S&P, doesn't really matter. We'll see the same kind of things playing out here. And, if we take a look at really coming off of the true bottom out here that was formed at 2 p.m., and that was on the trading session here, about was October 15th, right? October the 15th. That's when the Dow made its low. The low there was 15,769. If we begin our wave counts from that specific candle, which is what we should do out here, you could make the case that we've made that 7th wave count. It's been confirmed. That took place at 2 o'clock this morning. It actually was 4 a.m. when the confirmation came in, so that's when my system sent me a little text message that woke me up. Of course, I was getting text messages all through the night because on intraday charts, we were getting these same types of patterns out here. So I had to come take a look at it, see if it made sense to place a trade. On an intraday basis, I placed one trade, and even though it was kind of suspect out there, but I had to go with the signals. And here, there's nothing. So you've got at 2 o'clock in the morning, the high out here inside the Dow futures is 16,598. Bottom line, you see one tick above that, 16,599. Nothing more bullish than a failed bearish pattern out here. Look, there may be these alternative counts that are out here. Let's just go off of the lows on this 120-minute chart out there. And what does that say? That probably says, well, you're probably not going to get that retracement that Stevie would like us to get. Just one more thing to maybe shake out some of the bulls. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, if the month had ended here yesterday, we were taking a look at the Russell 2000. That's the chart that's up on my screen here. And if we take a look at the Russell 2000, here's what we know about it. Number one, it's been in a 17-year, 500-point consolidation. The breakout of that consolidation, which was at the 850 level, it broke out of the consolidation. Let me get my cursor here. That would make things a little bit easier for me. The final break of that consolidation was in January 2013 out here. And that gives us a price projection of 1350. We know up at the top here, again, it's a monthly chart we're looking at. We know that's been consolidating in a 150-point move. The top of the move is right here at about the 1200 level. 1200, 130-point move, gets you to the 1330, 1350, goes ahead and completes that pattern. Now, I don't know if that's where the market is going to go by the end of Christmas or not. If we do also take a look at the trend line, interesting trend line here, coming off of the March of 2000 high to the October of 2000 and, or actually in this case here, the June 2007 high, the July 2007 high. What price actually did this month is it careened down through it, but it's rejected it. You've actually, if the session were to end like this, you've got a hammer candle that has formed inside of a monthly chart for the Russell 2000. Now remember, the Russell 2000 is the one that got all the notoriety, all the claim out there of being the weak link, of having a 50-day cross of the 200. It had the death cross out there. Of course, we know that it really had been just traveling inside of a consolidation pattern. So I don't know how the month is going to end, but at this stage here, one heck of a fight-off of a number of different bearish patterns that are out there, and that's inside the Russell 2000. Hey, let's go out to our writer extraordinaire, Mark in Concord, Massachusetts. Mark, how you doing?
I'm fine, Steve. How are you?
Excellent. Thanks so much for asking.
Did you ever finish the book I sent you?
No, I didn't. I have not been able to finish it. I've got so many other things going on. My apologies there.
That's okay. I got another one or two for you when you get done with that one.
Hey, we've got two writers that we know of.
You mentioned that last time I spoke to you too.
Yeah, the other writer is Kay Rico.
So, he's done in Costa Rica, I think.
He is, but he's back here. He's back here in the States, recovering from a number of different health things. So he's came back to the U.S. to take care of one health thing. They found something else underneath the hood that they've repaired, and so he too is a writer. Yeah, how about that?
So maybe you should have a Saturday forum for writers or something like that.
Oh, I love it. I love it.
I'm thinking about writing one about stock trading, and so I like your feedback on one I sent you.
Absolutely. Hey, Mark, you want to take a look at the S&Ps? Tell me what you're doing, what you're looking at.
Well, yes, it sounds like I haven't heard you in last couple of days, but it sounds like you're very much in the bull camp, as Tom would say. My question is, Tom thinks that we're going very, very much lower, and he thinks that in last night's show he said we're going to hit it's going to come up and test the string of the 1967.68, which, based upon yesterday's close, is a 26.4 upside today. And then he says we're going to really come down. My question is, in listening to you this morning, it sounds like you are not in that camp.
I'm not. I have not. I've had so many things going on. I haven't had a chance to listen to any of the other shows, so I don't know what any of the show hosts are thinking. But and it's not so much me that's in that camp. It's my reading of the charts. It's my reading of the fact that, number one, I was calling for a significant market bottom as the market was even crashing. And I had not changed my tune on that. And so the market has clearly played out to that effect.
Okay.
And if you take a look at the S&P on even on a daily chart, this has a very significant V-shaped oriented bottom. In fact, what I did, Mark, was I went back as far as I could to find another bottom that looked like this, to understand the potential strength that was out there. And actually, the interesting thing, I don't know if I've got the data that goes back on this chart. No. Let me try to do this right here. Let me do the data series. But what I will tell you, what I found was the last time I saw this type of a strong bottom out here, let me put 4,000 days, that ought to cover it, was actually, hey, Mark, can you hold on through the break?
I will, Steve.
Okay. Then maybe I'll be able to pull things together as well. We're going to go back out to Mark in Concord. We'll take a look at how this market's going to open, and then we'll go right back to Mark. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got a flat market. The Dow off 1 point, S&P up 2, composite up 4, Russell up a couple of points out there. Let's go back out to Mark in Concord, Massachusetts. Now, Mark, what I'd like to do is let me just kind of walk you through this step by step as far as what I see on the chart. So it's not so much my opinion as much as I'm just going to walk you through what I see on the charts and the chart patterns out there and the things that led me to the conclusion that I have come up with regard to this being a significant bottom out there. And since we've had more information since October 15th, that's really helped to cement that belief that that's what's going on. I can't control the market, any more than you can, as you know, and so anything can change in a heartbeat out there. But what I can do is just say, hey, let's take a look at the piece of information that we have right now. Okay, so that's where we'll start. And what I want to do with you is I want to take a look at the New York Stock Exchange first, because that's really where my signals were coming from with regard to a significant market bottom. Now, a question for you. Did you get a chance to hear any of my shows when I was making a big deal about the price oscillator? I'm going to pull that up on my screen out here inside the New York Stock Exchange when it was making higher lows out there. Did you get a chance to catch any of those shows?
No, I didn't. I've been away. I've been on vacation for the last couple of weeks, and then I...
Good. Okay, so just so you understand where I'm coming from on my read of the charts, and what I did for all of our listeners and viewers is I took the New York Stock Exchange, and the New York Stock Exchange, when its price oscillator dips below the zero line, and that's on the bottom portion of my chart out here, that's when its summation index turns down. That's when the trend is believed to have changed. So in this case here, from bulls to bears, that happened right around September the 8th. Inside this most current move that we had to the downside. As it was making, as the first low that we had out here inside the New York Stock Exchange, when it made the lowest oscillator reading, took place on September 25th. Now, the market moved much lower inside the New York Stock Exchange, inside the general market from that time forward all the way to the October 15th level. And the oscillator remained below this zero line. Now, Mark, what it was doing as that was occurring was it was making these higher lows out there. Now, that's a pattern that you can go back and you can take a look at historically on the chart. I went back 15 years. We took a look at every single instance when that happened. And in every single instance, what we saw was at least a bounce. 2 times, it was only just a little bounce. The other times, it was a significant market bottom. Significant market bottom. Last time that we saw one that went on for this long was the bottom that took place back here in June of 2013. Pretty significant bottom out here. Now, if you actually went from the June of 2013 low inside the New York Stock Exchange up to the high in September, you didn't even make a 0.618 retracement of that move. That says, hey, you're pretty strong. What you did do here over the last, on October 15th, was you made a Gartley buy pattern. Gartley buy pattern. And it's only inside the New York Stock Exchange, inside of the market, I think since like November 2012. There's only the second Gartley buy pattern that's out there. So you've got that in place. So just, again, take a look at that oscillator. Now, here's the thing about what's taken place, what's transpired, which gives me more conviction in being able to say to you, this market has made a significant low, the kind that takes us up into the end of the year, is over the last 4 days, that oscillator reading, we got up to 205 yesterday. Right now we're 201.10 inside that. That is basically what is called initiation of a move even higher. That doesn't mean that we don't get some type of retracement. I'd love love to see some type of retracement. I'd love to see the NYSE pull back to 10,387.17 and bounce off of that. Right now you're at 10,495 out there. And so just as there were patterns along the bottoms there, we also have these patterns along the top when the price oscillator in such a quick period of time. I mean, this is really a fast, explosive move. One of the fastest explosive moves that we have seen in years inside the wider swath of the marketplace. The market has never ended with that type of a move. So that's kind of pretty cool out there. Okay, so it's on it's the New York Stock Exchange. Even we take a look at the New York Stock Exchange, a very significant V-shaped bottom that is forming out here. So that was really what I was taking a look at. And if we go take a look at the S&P 500, right? Yeah.
Steve, I hate to interrupt you. One of my doctors is on my cell phone, so I need to run. So
hey,
I'm
no
going to catch this in the archive, but thank you for the information. I just wish that you and Tom would get back together and do a joint show.
Yeah.
Anyway, thank you, Steve. Talk to you soon.
Hey, best of luck to you. Thanks for calling in. That was Mark in Concord, Massachusetts. You know what I will do, folks, is let me just carry this forward visually so that you can see what it is that I'm looking at on the screen. And I'll answer Jay's question, could this, Steve, could this not be an A to B equals C to the downside? What I first want to, and I will say to Jay, anything is possible. Absolutely anything is possible out here. But instead, let's just take a look at the chart information that we've got. Let's open ourselves always up to both sides of the trade out here. And let's take a look at other chart patterns out here. And that is, if we take a look at this move off of the lows out here, this has not been short covering. This has been absolutely buying. How do we know that? Let's just take a look at the VIX index as a clue out here. The VIX index yesterday got below the 50-day exponential moving average. You're trading really right on it right now. Look, if that VIX index gets below the 50-day moving average and stays down there, that's just nothing but a liquidity gauge for me. Everybody uses it a little bit differently. You know that I use it just to take a look at that 50-day exponential moving average out there. You get below that, to me, that says there's plenty of liquidity inside of the marketplace. If you take a look and we go back to the S&P 500, we're going to do that here right now. And we take a look at, I've really cleaned up my chart so that it's just nothing but black. Take a look at that V there. Take a look at the strength of that V. And if we come back and we take a look at other, just kind of picture that in your mind out here. You know, it's even stronger than this one that was created back in February 2014. It's, you know, talk about the August lowest, doesn't even compare to what it is that we have seen here, this little victory formation. And as we come back, now, if you take a look at the February lows, at least it did 100% move. It actually went ahead and, you know, did more than that, made an expansion before we saw any kind of a pullback. So that's why I say the S&P is headed back to its highs in September out here. So that's where the S&P is headed to when we take a look at these patterns. If we take a look at any other real strong victory-shaped formation out here, even the one in June of 2014, to me is not as strong as the one that we just had here that took place. So if we keep coming back on this chart and we take a look, here's a nice bottom, right? November 2012, right? Substantial, significant bottom out here. And if you take a look at that V-shape versus what we've got, this one is even stronger than that one. It's absolutely, when I came back and I started taking a look at these charts out here to see what was going on, you know, maybe you could make the case that June of 2012, that is the kind that we're in right now. That was a significant bottom out here. Look, back in June of 2012, I guarantee you everybody was saying the sky was going to be falling in out here. What's interesting is that the bottom in October of 2011 formed something similar to what it is that we're taking a look at now. The one that I went back and took a look at, I'm going to try to get back here pretty quickly, is in 2007. And what the 2000, now it wasn't right off of the 2007 highs, it was the second move up. And so maybe that's what we need to pay attention to out here, because look, it's important for me to take a look at both sides of the trade. So we're now at October 11, 2007, the high in the S&P 500, and if we take a look at any potential, you know, even we don't actually even have a strong V-shaped type bottom that we've got in the marketplace right now. The closest thing I suppose that you could come to it was the one here in January of 2008. And with regard to a retracement, if we take a look at what it did from its retracement high to, let me see if I can grab that tool. We'll do that here. Come on, grab it. Oh, come on, do that for me. So if I come from, it's just simply from a swing point high down to the low, what we'll see is it made probably about a 50% retracement out there in the market, and that was into January 2008. Of course, the lows took place in March of 2009. So I just simply throw out there that if we take a look at pattern formations, we take a look at that New York Stock Exchange, which was the real key thing that I was looking at to say this market is getting ready to make a significant bottom out there. And really what's transpired since October 15th really just helps me to cement that idea. And that's why I'm saying, hey, maybe one nice little pullback here would give all of you the opportunity to get in on the bullish side of the market. I know that everybody else is out there talking about, I don't know everybody else. I know that, there are folks that are talking about the bearish side. And there was Jay in the Den said something about, hey, could this possibly be an A to B equals CD down? And the absolute answer to that is it most certainly could be. And it could be, and the reason why I think that Jay would come up with that is because if we go take a look at this, we take a look at the volume off of the bottom out here. So let's go take a look at it. Let's take a look at the Qs as an example. Now, the Qs also provide us with another great bottoming pattern out here, significant bottoming pattern. Let me get rid of the retracement levels here just so I walk you through it. The Qs here, when we finally made its lows, it did it with the kind of volume that's been associated with significant bottoms. The volume that took place on the trading session of October the 15th was 108 million shares down there. Now, it's just the Qs that have this volume pattern, and I've provided this information to you on so many occasions. Do the work yourself. Don't trust me. Please, don't trust me. Just do the work yourself. Go back, take a QQQ chart, go back as far as you can, go take a look at those bottoms. You're going to see either on the day or within a few days those high volume spikes to the downside. That was capitulation. I can't tell you why it works now. I just know that it does work, and until it stops working, it means we need to give the preponderance of evidence that that becomes the bottom, not that the market goes back down there and revisits those. Because if it was going to revisit those levels, then please tell me, why did it not get back to the April 15th lows here? Because that was pretty good volume. That was 84 million shares to the downside. Of course, we saw about 131 million shares to the downside on April the 4th, 2014. So if those high volume lows are going to go ahead and attract where price is going to go to, then why didn't it happen back then? Is the question that I would pose to you. If we come back into the time period here, into February of 2014, February 3rd specifically, 65 million shares to the downside. Now, in that case, price did come back and it tested it, right? It tested it in April. It tested it with even more volume, and then off to the races out there. So that formed a bottom. If we take a look at, come on, work with me here. If we take a look at this low that came in on October the 9th, 2013, down with massive volume. No, not massive volume, but 65 million shares to the downside. Market never came back and tested that. Come back, take a look at the lows here in June of 2013. The actual volume session took place 2 days prior. That was on June the 20th. 60 million shares to the downside. The market ever go back and test that? No, it didn't. So the Qs, if for the bears point of view, are better off when there's not big, huge capitulation volume like what we saw back here on October the 15th. And so just go back and look at it on the charts. Don't trust me. Just go take a look at those high volume days out there. And what you're going to see as you go back and you take a look at it, you're going to see the exact same thing that I've seen. Go back to November 16, 2012, 70 million shares to the downside. Price never went back and tested that level. It was off to the races. I believe that we're off to the races this time as well. At a minimum, what the Qs ought to do here, and you take a look at that V for victory formation out here, what the Qs ought to do. Now, here's the other thing that people will get caught up and they'll say, hey, look, and this is where I know that Jay's coming from, and so I get it, I understand it with regard to volume analysis. And if you take a look at that first day, truly the first day off of the lows out here, and that was on October the 17th, what you'll see is we were, in essence, up with 69 million. Somebody would make the case that we were down with 108 million shares, right? So that's the normal thinking out there. And somebody would say, man, that's a bounce on light volume. Here's what I would also say. Go back and take a look at all of the other high-volume lows we made and take a look at what those bounces were done with. Guess what the bounces were done with? That's right, light volume. Even go back, just as simple as going back to the October 8th time period. It was October the 1st. There was 60 million shares to the downside. So that was really your big volume day. To the upside on August the 11th. Remember how the market just simply, exploded higher? Guess what that first day off the bottom was with? 28 million shares. So 28 million shares to the upside off of a significant low. Compare that to what just took place a couple days ago. 69 million shares to the upside. You tell me which one is stronger. The one from August the 8th, which is one that if you weren't long, you were saying to yourself, man, how do I get in on that type of move out here? So the bottom that we just saw and the move off of the bottom, way more explosive than what we saw at the August lows. Take a look at, we'll go find another significant low out here. Let's take a look at April 15th, right? We're talking about down with 84 million and down with 131 million shares on April the 4th. On that first day up, 46 million shares. 46 million. Was that a significant low? Yes or no? April 15th. The answer is absolutely. But take a look at what the other characteristic here that I want to share with you, that I want you to wrap your head around when you take a look at volume out there. That's why I say go do your work. This is nothing more than pattern recognition. Just different kind of pattern recognition. And the cool thing about the charts and everything that it provides to us is as long as we're willing to do the work, and I'm a very diligent individual out here, as long as we're willing to do the work, it provides us with very strong messaging. Now look, bottom line, I can't control what's going to happen next in the market. I can't control the next Ebola case, the next terrorist attack, the next anything out there. But what I can tell you right now is Santa Claus has arrived. He's in the building. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 22, S&P up 5, Composite up 12, Russell's up a couple of points as well. And, during the break, I made a couple of comments in the den, so I'll go ahead and share those with you. And let me just also correct one of those comments I made in the den. Now, part of the workshop that I'm going to do for the folks over at eSignal next Wednesday at 4:30, and don't forget, there's a link on the homepage at TFNN.com. So if you're not an eSignal subscriber, that's a way that you can get in to that free workshop. And part of what I'll cover there certainly is going to be H.M. Gartley's pattern out there, just as an overview of different patterns to pay attention to in the marketplace. And if you read his book, and you should read his book, you can actually, I think, find it even on the internet out there these days. His pattern was a way of being able to get into a large leg that you had missed out on. And if we take a look at the market, if you go back to the November 2012 timeframe, there had previously been only 2 A to B equals CD down patterns. That's a Gartley pattern. You don't need the A to B equals CD to come into a Fibonacci level. That's just adding an additional element of maybe where price is going to move to. But he wasn't dealing with any Fibonacci stuff. All he was dealing with was, and he didn't understand my opinion, he didn't understand how to buy and sell that D point like I do, because of just simply my diligence to be able to study it, go take a look at putting that together with candlestick charting and a number of other tools out there. But I'm not here to really argue that. What I'm here to say is that, and I believe in his patterns out there, if you own the art of timing the trade, which you should believe in those patterns as well. And since the November 2012 lows, we've only seen 2 A to B equals CD down patterns that have formed. The first one was in June of 2013. So if you missed coming off in November 2012, would you have liked to have bought that Gartley pattern in June of 2013? How could the answer be no? The second pattern that took place out here was the one that took place in April of 2014. That was your second A to B equals CD down pattern. The third one just took place out here. So and these patterns can fail. They absolutely can fail out there. I can't guarantee you the future. What I can do is just simply lay out the facts, ask you to just simply open up your mind as I am on both sides of the trade out here, and then go back and then say, okay, what is the market really communicating to us at this stage here? And what I believe that it's communicating at a minimum is a test of the highs. I actually believe the highs are going to be blown away, not the lows inside the market. The highs are going to be blown away. And if you take a look at the volume on September 19th inside the Qs, it's only 46 million shares out there. Yesterday you did 53 million shares. The day before, 41 million shares. The day before, 69 million shares. Today already you've done 7 million shares out here. So, my impression as I take a look at this and study all of the patterns that are out there, this market is screaming to us that it actually wants to go higher, not lower. And until I see some other data that changes, and I'm happy to change. It's now, 9:57? At 9:58, if the information were out there for me to change my opinion on that, I would do it in a heartbeat. Because that's really what my job and my responsibility is for each and every one of you out there, is to be candid, to ignore all other information, to just focus in on the charts, the patterns that were out here, go back and take a look at history, see what it shows. And at this stage here right now, you got the VIX index hovering below the 50-day exponential moving average. Guess what? Nothing but liquidity when you see a trade below that. And that says these markets are going to do one of two things. They're going to go sideways to higher out there. It just simply may be one of these markets that doesn't really let you in, and you just got to punch your ticket and hop on board. Well, folks, it is Wonderful Wednesday. Thanks so much for spending your time with me and listening to my thoughts on the market. Have a great day, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.